Hello and welcome to Startup Street. I'm Shruti Mishra. These are the top headlines from the startup space. In what ranks as one of the largest funding rounds of 2023 thus far, online fish and meat delivery platform Fresh to Home raises $104 million in its Series D round, with Amazon Sambhav Venture Fund taking the lead as a primary investor. The startup claims to have turned operationally profitable. EdTech startup AdmitCard raises 50 crore rupees in Series A funding round from GSV Ventures and other investors. The investment will be used to further expand the company's product offerings and accelerate its growth. Zomato remodels 10-minute delivery offering with home-style meals under every day. The service will provide home-style cooked meals and has been launching in select areas in Gurgaon, starting at 89 rupees. The angel tax provision in the finance bill will not impact startups in India. Startups registered with DPIIT do not come under the purview, Anurag Jain, the secretary in the department, said while speaking at the IVCA conclave in Mumbai. Without specifying, Jain said there are other issues which have been raised by the venture investing community and the same have been put forth before the Revenue Department for a review. US-based private equity firm Warburg Pincus remains bullish on India. Vishal Mahadevia tells CNBC-TV18 there's no change in investor sentiment and India is in a fantastic space for global investors. Adds that they are keen on investing in portfolio companies. Truecaller clocks growth in net sales of 13% combined with an adjusted EBITDA margin of 30.6% in the fourth quarter of 2022. The app witnessed a 68% sales growth in Indian markets in January to December 2022 as compared to the sales growth experienced in January to December 2021. Chinese search giant Baidu plans to implement its artificial intelligence chatbot Ernie into its search services from March. In an internal memo, Baidu CEO said that Ernie bot will be integrated across all of firm's operations. Baidu also plans to integrate Ernie into its smart car operating system and smart speaker. Those are the headlines we are tracking for you this evening. Fresh to Home, a fully integrated online consumer brand for preservative and antibiotic residue-free fresh fish and meat, has closed $104 million in its Series D funding, with Amazon Sambhav Venture Fund leading the round. Existing investors in Fresh to Home, including Iron Pillar, Investcorp, Investment Corporation of Dubai, Ascent Capital, and new investors E20 Investment, Mount Julian Ventures, and Dala Al Baraka, also participated in this round. To talk to us about the road ahead, joining me now is Shan Kadawal, the co-founder and CEO of Fresh to Home. Shan, welcome back to Startup Street. Fresh to Home is now a Proficon. You've achieved operating margin profitability. Shan, what led to this? Also, if you could tell us, how soon do you hope to achieve overall profitability and what is the current valuation of the company?
Hi, Shruti. Thank you for having me here. It's always great to be part in this show. Just at a very high level, we are, the largest online brand for fish and meat. It took us 7 years to get here, so it's not really something that took, was done overnight, and a lot of, pain and struggle to build the moat required to get to be operationally profitable. A big part of what we do is to go directly to fishermen and farmers, source, the freshest and the most chemical-free products, and then deliver that to consumers in 160 cities in India and the UAE. So now the unmet need really in India's market is an incredibly large market. The unmet need is really around lack of cold chain and also intermediaries in the entire fish supply chain. In the poultry supply chain, we believe a critical consumer need is really a lack of enough antibiotic-free, poultry. These are the two things that we have really solved. And what we've done is rather than going and doing it or buying it from vendors in the city, we've gone all the way down to the source, right? Our platform enables us to have almost 3,000 to 4,000 fishermen and farmers directly trading with us using a really innovative commodities exchange auctions technology.
Sure.
This allows us to, cut off the middlemen, save that extra, 10, 15, 20, 30% margins, and use that to build a sustainable business.
Sure, Shan, we'll delve deeper into the model a little bit later, but if you could tell me the valuation of the company.
So I was intentionally, delaying it. I couldn't really tell you the valuations; it'd be not there. But what I can tell you, it's at least 2 to 3 times higher than the previous round.
All right.
And I think, yeah.
Yeah, and also, like I mentioned earlier, Amazon Sambhav Venture Fund has led the Series D funding. What does their backing mean to you? What are the synergies? And how do you plan to use Amazon's infrastructure to build new markets?
So Amazon's is an amazing name. It's the gold standard for customer excellence. So we hope to learn some of that. We already are the leaders in sort of doing that from direct to consumer. But Amazon brings in an amazingly large scale experience. So it's a great financial partnership currently. It will potentially evolve into a lot more broader, but that's it at this point, and we'll go from there.
Okay, so tell me, Shan, how will the Fresh funds, raised strengthen Fresh to Home's mission to make 100% preservative and antibiotic residue-free fish, seafood and meat accessible and affordable to millions of meat lovers? What are the fund allocation plans?
So the primary use of capital is now to grow much more deeper in the 160 cities, of which 100 of them are new. So we are going much more deeper in those cities and bringing the share of revenue from those cities to be higher. The secondary capital is to expand internationally. So we are going. We've been very successful in the UAE. We are now going to Saudi. Okay. And lastly, this is one that's very close to my heart. Is we've been largely online until last year. And we've, in the last 12 months on the platform, we've started about 30 stores and to start our omni-channel strategy. This has become incredibly successful for us. We think this will be the growth vector going forward. So a reasonably large pool of capital will going into pursuing our omni-channel strategy. These already are about 20% of our new users come from these 30 stores that we have started in the last 12 months' time.
Okay, all right. Shan, like you were mentioning earlier, the core strength of Fresh to Home lies in its tech platform, Commodities Exchange, which empowers over 4,000 fishermen and farmers to electronically auction their produce for sale on the website. Tell me, what is your tech edge? How have you simplified the whole process?
So, in a very simple sense, right, in any commodities in India, and especially in the fish and meat space, there is huge amounts of exploitation of the producer, right? And this is because they don't have access to the final market. So in a fish industry, they have to rely on at least 3 or 4 middlemen to reach the end consumer. This adds not just, a price exploitation to the fisherman or farmer. It also adds quality issues for the end consumer because the fish is an extremely perishable product, right? And it can't stay for 3-4 days without cold chain. So what we are doing really here is that we've given an app to the huge number of fishermen in the different harbors of India, and we allow them to electronically bid with us, right? At the same time that they're doing a physical auction, they're able to auction also on our marketplace. And essentially what this allows them to do is to get a 20% higher price. Now, as a company, we get, a 40% overall gross margin, right? Because we are able to leverage the arbitrage, we're able to cut off the middleman. So it's a win-win for both parties. And it allows the trust to pass that price benefit then to the consumer and to run a really bottom line positive business, right? Which brings me to the, the full operational margin profitability. And that's why we call ourselves a Proficon.
Yeah. Okay. So you've created a robust technology-enabled supply chain and scalable backward integrated capabilities to serve both customers as well as farmers and fishers. Shan, if you can now talk to me about Fresh to Home's revenue model and the revenue mix coming from India and UAE.
So we about 15% of our revenue comes from international in UAE, and the 85% is from India. Fish is about 40 to 45% of what we sell. Then poultry is about 40%, and then everything else is after that.
And the revenue model with both of your clients?
So we are a direct B2C model. We are a D2C. 100% of our revenue comes from the consumer.
All right. Shan, like you mentioned, you currently operate in over 160 cities in India and the UAE, and you offer more than 2,000 certified fresh and chemical-free products. Any new product offerings in the pipeline?
So we have, in the last 12 months, we've really worked on the ready-to-eat and ready-to-cook part of our portfolio. It used to be about 2% of our overall revenues in the last 12 months back. Now it's about 11% of our revenues. So that's an incredible jump. It's all on the back of the same brand edifice that we talk about. Everything that we sell is preservative free. So anything that you buy in ready to cook or ready to eat won't have an E number or any of the bad stuff that you would see from a shrink wrapped in the retail stores.
All right, Shan, wish you the very best with all your expansion plans and especially with Saudi. Many thanks for joining us on Startup Street today.
Thank you, Shruti. Thank you for having me.
Moving on, profitability is the hot topic for startup founders and investors this year. EdTech unicorn Eruditus losses had ballooned to $264 million in FY21. The company, however, claims to have grown 2x year-on-year in 2022. Speaking to my colleague Aishwarya Anand, Ashwin Damera, the co-founder and CEO of Eruditus, said that for FY23, the company is almost break-even and will hit profitability by June. Listen in.
If I look at the FY21 numbers, of that 200 plus million that you're referring to as a loss, nearly 200 million was just expensing of stock options.
Okay.
So our valuation went from 700 odd million dollars to 3.2 billion.
Okay.
Right, it went up 4x. So on that delta, our stock option pool, we had to do a mark to market. So that's a accounting entry. It's not actually a cash loss. But having said that, look, you're right. Every company in this environment is looking for profitability. So fundamentally, the paradigm of how even outside, say, investors or stakeholders have looked at us has changed. But I think it's a very good thing. So good companies that have a solid business, you will quickly figure out who they are. And there'll be some companies, who are Hawaii mein selling this idea that I'll build a community and sometime in the future I will monetize them, and they'll realize that it's not. They will probably disappear.
But on that note, please do shed some light on what your FY22 numbers look like, and what's the target for this year? For FY23 to 24 also.
We grew about 2x year on year. I'll tell you this year because this is most current. This year we'll end with bookings of about $430 million to $450 million. This quarter we'll nearly break even Jan, Feb, March, and next quarter, April, May, June, we will be profitable.
You have also trimmed your workforce by close to, I think you've laid off 40 staff. So I want to understand for you that why did that happen? Why did the company decide to take that decision? And what are the hiring plans for this year? Is the pain behind us, or is it going to be tougher this year?
So, these are, like you rightly said, we also had to look at our people and every single cost, by the way. But what we've definitely done is there were certain areas where we were spending where the ROI was perhaps negative.
Okay.
Right? Maybe we should have got 100 students in a class where we enrolled 120. Those extra 20 maybe were coming at a very high CAC. Right? Maybe we were creating 100 courses a year, but maybe only 80 were needed because the other 20 were not actually very good courses or did not have market receptivity. So every company is looking at every single piece of cost, every single piece of revenue, every new product initiated, every new market that you may be in or you may want to enter into, and looking at what's the right area for us to trim. I think about us as looking at good growth and bad growth. Good growth, even if it's loss-making for us, I think we will continue to have the appetite to invest in. So bad growth, no chance.
A large share of your revenues come from outside India. That is, I think your top 3 markets have been US, Latin America, and Europe, correct? So I want to understand that, will you continue focusing on the international markets for majority of the revenues to come in from? Or, you would start building, you would start focusing on India to become your top market too?
Great question. Actually, India now is our second biggest market. So US is 35%. India is now about 25%. Okay. Our gross enrollment ratio in India is 27%, meaning only 27% of the kids who finish high school go to college. US is 80%, UK I think is 55%, China is 40%. So, if you want to take that 27% to 40%, right, that means about 13 to 15 million seats are required in our higher education institutions. And the only way to do it will be online. I mean, some of it can be through new campuses and all of that. That's a massive opportunity for everybody. If this bill for foreign education providers to come to India is passed, massive opportunity for the entire ecosystem, right? We're also thinking about how do we go to Bharat, right? Even today, our courses, if I'm honest with myself, it's tier 1, it's for English speaking.
The urban cities.
Urban cities, right? And the need that 600 million youth, not all of them speak English.
Correct.
So we are trying to find those universities that may be a big brand in that tier 2, tier 3 city. Maybe even teach in English, right? Maybe their MBA program is priced at 40,000 rupees for 2 years, right? And maybe half of it is charged now and half of it is charged after you get a job.
Yeah.
So we're looking at a lot of these new models. Of course, we have to also think about if you're charging 40,000 rupees, can you still deliver quality?
Do you plan on raising more capital this year or maybe next year? And or will you be treading the fundraising path very carefully?
If there's an acquisition that involves cash, then obviously we will want to. But even otherwise, look, if the markets start looking slightly better for us, potentially, our focus, if you ask me today, is just think about being profitable. I often joke that first 7 years of eruditus and emeritus, we were profitable. We didn't raise any external capital. So we know how to run a profitable company.
Business, yeah.
We all got a little distracted, but now we're focused again.
With that, it is time for a short break. Coming up next, a special conversation with Arvind Mani, the co-founder of River, an electric two-wheeler company, on the latest launch, Indy. Stay tuned.
The government's persistent push towards EV adoption has led to a gold rush, with multiple players trying to capture this opportunity, mushrooming of startups in this EV space. And the latest entrant here is Bengaluru-based River, which has just launched its electric scooter. And to talk to me about that and the plans for this River EV, the newest kid on the block, is its co-founder and CEO, Arvind Mani. Arvind, thanks very much for speaking to CNBC-TV18. 2 years in the making almost for this electric scooter that you've launched today. You call it the SUV of scooters or electric scooters. What is the reason behind that?
So we have several features that kind of make the scooter stand out. It makes it very distinct in terms of the utility and the lifestyle that it brings. Like 14-inch wheels, we have the largest storage in any scooter out there, not only EVs, in any scooter out there.
Okay.
We have several customization options for which you can use the scooter in a different way at different times of the day, depending on your need. So all that makes it the SUV scooters.
So who is this targeted towards? Is it for people commuting every day to office? Is it for the Swiggies and Olas and the electrification of their fleet? Or what do you think is the target market?
So we are targeting solo entrepreneurs, and as you know, more than 50% of India is self-employed, whether he runs a store or a carpenter or an electrician or any of the people who pick up a trade like a home chef. So this is targeted at them who has a need to do multiple things other than commute on a vehicle.
I see. Yeah, the big question always is, how much does it go on a single charge? And secondly, how is it priced and how does it compare to the peers?
Sure. On a single charge, the vehicle goes 120 kilometers.
Okay.
And it's priced at 1,25,000 rupees ex-showroom Bangalore.
Okay.
Yeah.
And how do you think that stacks up, given your competitors have launched or are looking to launch scooters around that range?
So I don't think price really matters in the market. It's really a value for money market. So we are confident that there is no other product that comes with the kind of offerings that we have in terms of the space or the utility value that the vehicle brings, or even the style it comes with. So price is really not going to be a problem.
Okay, so given that price is not a problem, you're still coming up in a market which has several well-established players with deep pockets. Some are startups, some are established companies. What is going to set River apart, and what will be your go-to market strategy?
So there are many established players, but the market is huge. Last year we sold kind of around 600,000 electric scooters out of the 18 million two-wheelers which are sold, right? So the market is there and the space is there for everyone. And we run a very efficient shop. Like, it is completely designed and conceived and developed in India, and the development time was less than 2 years. We have a team of around 300 with around 250 people in R&D itself. So we run a very tight ship, very, very efficient and agile shop. So that's going to be a major difference. Our distribution strategy is a city-wise plan where we want to go to 3 cities in 2023, 50 cities in 2024, and then scale up from there.
Okay. Yeah. What are these 3 cities you'll start with?
Bangalore for sure. We're still evaluating 2 more cities. We will announce that in the coming months.
All right. If you could also tell us, do you have a demand or an order pipeline already built up? And what is the kind of manufacturing capability that you have capacity as well?
So we are opening pre-orders for Indy today. So we can already see the order pipeline getting filled up right now.
Okay.
And
any numbers?
No numbers yet, sorry. So the manufacturing facility is up and running in the outskirts of Bangalore. Okay. It will have a capacity of 100,000 scooters per annum. So that roughly translates to around 9,000 vehicles per month.
I see. Also, if I were to quickly ask you, will you be requiring more funding? You've raised $13 million so far to build this electric scooter. Now you say you have a strong pipeline, although you haven't told us what the number is. How much would you require if you have to raise money, and how soon would that be?
So the $13 million that we raised were completely invested into R&D and the factory. Now we will raise startup capital. Well, this is a capital-intensive business, and we are continuously fundraising. So you will hear more news about it in the next few days. Okay. So we're targeting to raise around 50 million in Series B later this year or early next year.
Okay, $50 million in total in Series B. Okay, thank you very much, Mani, for speaking to us. Any final thoughts, to the consumers out there, for the newest EV scooter, what they have to look forward to?
I think the scooter will speak for itself. There is nothing like this there in the market today, whether it's an IC engine scooter or an electric scooter. Sure. So let the product speak for itself.
Oh, actually, there is the concern about charging infrastructure, which I forgot to address earlier. But, would River also be investing in that as well?
Yeah, we have plans to do that. The vehicle comes with a standard charger that you can use to charge in your house, but we have plans to invest in charging infrastructure sometime starting 2024.
All right, Arvind, thank you very much.
Thank you. Thanks a lot.
Thank you. It's back to you guys in the studio.
Well, thanks, Ritu. And that was River's new electric scooter Indeep that's priced at 1.25 lakh rupees and delivery to start in August 2023, says the founder Arvind Mani. With that, it's a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
Let's you